Hello friends. In this video, we'll talk about two small companies from chemical space, Chemcrux Enterprises and GG Chemicals. If we talk about Chemcrux, then company is incorporated in 1996 and it manufactures and processes bulk drug intermediates. It specializes in high pressure oxidation, nitration, chlorosulfonation and uh, amidation chemistry. Manufacturing intermediates for bulk APIs, dyes, pigments, electroplating, pharma, dyes, and pigments. So we can see that company is well diversified as far as its product range is concerned. It has 120 metric ton of capacity, and below are the drug intermediates which company produces. If we talk about JG Chemicals, then company was incorporated in 2001 and it has specialty in producing 80 grades of zinc oxide. It's a leading zinc manufacturer in India and top 20 global producer, employing widely adopted French process technology. Uh, and company holds 30% market share as of March 2022. It has total of three manufacturing facilities and has installed capacity of 77,000 MTPA. So we can see that Chemcrux has a pretty diversified product range, whereas JG Chemical is focused only on zinc oxide, but it has leadership and has a very good market share in this segment. If we talk about their market size, then Chemcrux has a market cap of around 240 crores, whereas JG Chemicals has a market cap of around 1,500 crores. So it is quite clear that because JG Chemical is a leader and has a good market presence, uh, the that is the reason why it has higher market cap as well. Whereas if we talk about their PE, then JG has lower PE compared to Chemcrux. Chemcrux has a P of 33, whereas JG has a P of 27. ROE, ROC numbers are low. They are anyway generally low in chemical companies. Chemcrux does provide a dividend of 0.6%, wherein JG Chemical doesn't provide any dividend yield. If we talk about their valuations, then for Chemcrux, current PE is more than its historical average of 26.2, and for JG Chemical also, its current P is more than its historical average of 18. So, though these companies do not have very high P, but still they are above than their historical average. Uh, the reason for relatively high P despite stock falling is also because the drop in profits. We can see that from 2023 for Chemcrux, profits have come down, and same is the case with JG Chemicals. If we talk about their actual numbers, then for Chemcrux, sales CAGR is 7% for last 5 year and 18% for last 10 years. Uh, Whereas profit CAGR for 10 years 34, but it's negative for last 3 years. So it's clear from these numbers that the company lacks consistency in terms of profit, and even sales growth is also not very high. It's in single digit. Uh, so that is something to be considered. If there is a turnaround which happens, then there is a good possibility of this stock doing pretty well, since it's a very small company. Even if it becomes 10 times, then its market cap will still be 2,500 crores, and there are so many companies in India which has market cap of nearly 2,500 crores. SRF has a market cap of more than 50,000 crores. So in that context, Chemcrux is very small, and if numbers improve even by slight margin, we can see this stock outperforming. For JG Chemicals, 3-year sales CAGR is 15% and profit CAGR is 12%. Uh, Again, company lacks consistency. Sales was 782, which has come down to 666. However, it is slightly better than Chemcrux. Profit numbers also have gone up constantly before coming down from 2023. If we talk about their technicals, then Chemcrux stock is not doing well. from its top of around 500. It has come down to 150. So there has been a significant drop, almost 60-70% drop from its all-time high. And even in current situation also, it is following this decreasing trend line. Company did try and take support near this trend line in the past, and has also shown resistance near this decreasing trend line. However, we'll have to see how company declares its quarterly numbers. Everything will be dependent on that. If they are good, then we can expect a slight turnaround. But if they are poor, then there is a high possibility of company stock going even below. When company delivers decent result, then we can see it turns multi-bagger. Stock went from 50 to 500 within just 1.5 years. However, reverse has happened now since company has started declaring poor results. So this is a good case in point for us to remember that small companies also have high risks. So investors should be cognizant of this fact and invest small amount in small companies, since there is a high risk involved in them. If we talk about technicals of GG Chemical, then this stock is following the increasing trend line. It did take support near this trend line and is currently trading at a price of 389 from its peak of around 480. Stock has come down by around 20%. uh, Again, company got listed, and financial years before that were good for this company, but after listing it has started showing poor result, which is something to be considered. Remember friends, this analysis is only for the educational purpose. Kindly do not consider it as a buy or sell recommendation. Please consult your investment advisors before taking any buy or sell call. Thank you.